Ho, 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 it's magic, you know. Better believe it's not so. Welcome back, ladies and gentlemen, for another cryptocurrency market update video. This is going to be your daily market update. We are going to be diving into the cryptocurrency market and also external markets relating to our market, really the macro markets. This is going to be a video predominantly looking at the technicals for Bitcoin, but we're also going to throw in a little bit about what's going on around us. We're going to be looking at the dollar. There's lots going on. You know, we have been predicting really from the 15K range a rally, a relief rally really, but with the possibility of some sort of extension on the back end of a weak dollar. So that's what we're going to be talking about in this video. We're going to be doing some technicals. We're going to be dropping down the time frames. We've been very accurate so far on our short-term time prediction. However, I just really want to stress this as aggressively as I possibly can. Aggressively is definitely not the right word. But essentially, this bear market isn't over, in my opinion. There is still a major event ahead of us that is going to cause all markets to plummet potentially, and the reason that we've essentially had a good inclination that you're going to get a rally here had a lot to do with this bullish divergence. So divergences very quickly are when an indicator like the RSI is doing the opposite in terms of what the price is doing. So we had the price action here for Bitcoin putting in lower lows, and then we had the RSI actually putting in a higher low. So there's a divergence there, and that essentially is something that as a trader, as a macro analyzer, or a market analyzer, I should say, I have to take extremely seriously. And the last time that we had one of these actually led into March 2020, which really ties up very nicely with our thesis that we think, you know, we've said, look, this is essentially what we see playing out. And I might be totally wrong. Right now we're right, but something could change. And you may not get as high as a retracement of the FTX move. I think Bitcoin stands a very good chance of getting to 18, 19, 20K. Does it go much higher than that? Certainly going up to that 21K range, you're going to run into serious resistance. But this is really our play moving forwards, guys. And we're going to drop down the time frames and sort of chop it up on a smaller time frame, and then we'll get into a little bit of the news. I still do honestly believe that we're heading into a pretty brutal recession. I think that, I mean, there's a lot to take away. We saw a record sales on Amazon and Black Friday sales in the US. Now, that makes me think that what's potentially going to happen hasn't already happened, and then that's still very much on the cards, because if people are still in some regards spending and flush, and we haven't seen that restriction. We are seeing the restriction on the consumer level. We're seeing it on a corporate level with all these layoffs, and we've done studies on looking at the unemployment rate and, of course, the stock market and the correlation there. But this is the US personal savings rate in regards to depositable personal income, and it's at a low. It's at a 2005 low. Now, that's rather magnificent given the fact that there was this massive print-a-thon of money, and you can see that it's clearly not gone to the people. So let's do a little bit of Bitcoin TA. So we're going to drop down the time frames. We will start off with the daily time frame, and essentially, I'll go ahead and actually remove the draws, because I'm always a bit wary coming onto my charts, because I never know what I'm going to find, because I'm doing TA constantly, consistently. I do it with my Patreon, so anybody that's interested in joining my Patreon, there's a link in the description. As it is the start of the month, it is well worth joining, guys. The aim with that is to make you guys better than every other person that's giving out content on YouTube and Twitter, and have you guys actually be more knowledgeable than these individuals, because it's my opinion that the vast majority of stuff that is put out there is complete garbage. They haven't got a clue, and we're here to kind of change that for normal people, and kind of, you know, make it so that influencers don't have as much control potentially over people, and they can kind of be self-reliant, and it's all about teaching people how to fish, essentially. So, you know, we were very short along this grind line. We broke it. We essentially said, look, we closed all our shorts out here. We said, you're definitely going to get resistant support here. You don't short support. It's a very technical sort of thing to say. We then even drew a schematic on yesterday that's actually somewhat playing out. So this is a short squeeze that, you know, you then came up and you found your support here. We broke it. This was on the BlockFi news, and the dollar actually had quite a strong day here. So I can just bring that up, you can see you had this real spike up in the dollar, and then the dollar has somewhat subsided since then. So we will talk about the dollar because it's extremely relevant, and this is why, ultimately, tying into our thesis, why we think there's going to be a rally, at least coming back up to your 18.1 levels, and then potentially looking at these higher levels above. If we have a weaker dollar, which we are having, we had rather a weak dollar off the back of Jerome's speech on Wednesday, and that was because he kind of said, look, we're going to slow down interest rate. But I think, going to Bullard's comments, which is another Fed member, that actually they're going to be, that markets are underpricing this. So, yes, they might be slowing down, but they're still going to be bloody aggressive, in my opinion. And this is ultimately going to lead to markets don't, when you get these guys coming out and going, it's going to zero, you know, imminent crash, all of this stuff taking place. And I understand the game, and there's nothing. I've got nothing against these guys. It's really a way to get viewers on the channel. But often, you know, markets don't just go down in a straight line, and we've had nothing but confluence of that this whole way down. You know, we've had these sort of rest periods. But this was a 150-day channel that we broke out of, and it's my opinion that you're at least going to get a retest of it. So looking at 18.5. And then potentially, you know, there is definitely the scope for that further upside. And maybe we do something like this before we come back down the other end. You know, this is something that I'm looking at, actively trying to trade. Really, from a trading point of view, we've got swings on in terms of longs on a number of altcoins that we've been in, and my Patreons are in. But we are going to look to ride whatever upside there is. And I have said that it's very much like playing Russian roulette. And it's for the reasons that I've stated. I think there's something going to break in terms of the financial system. It's going to probably be global, and it's going to cause huge contagion. And right now, you know, the narrative was inflation is coming down in the areas we kind of want to see. It's not in others, but it's may coming down. We're going to see how we go with it. I think actually inflation is going to come back and stay persistently high for longer, and I don't think they're going to reach their 2% target, which is priced in for next year. So they want inflation in the US at 2%. I don't think they're going to get it. This is OPEC Plus considering deeper oil output cuts ahead of the Russia sanctions and proposed price caps. You also got in the US. The US is wanting the EU to be strict with China, but Europe can't afford it. I personally think that the US should stay out of everybody's business. I think they have been not even going to go down that rabbit hole, to be honest with you. But I you know, there's always two sides to every story. Is what I'm going to say on that. But the EU is in a very vulnerable situation in regards to Russia and China, because there's a lot of dependence on these countries for a lot of their supplies. And if they were to go through with this, it would cause a higher inflation. We're seeing the zero-something policy in China, which essentially I think is going to spike inflation. And I think this is also how many people were all these big YouTubers, guys, were coming out and getting extremely bearish here, having been bullish the entire way down, and then flipped bearish here. That's a big no-no for me, because as a trader, I'm like, oh, my shorts I need to get out of, because if everyone's looking at that, it will often play out in a different way. It's how we knew the short squeeze was going to take place. So chopping these ranges up right now, and we actually gave a schematic for you guys yesterday where we sort of looked, and I still think this is potentially on the cards, and bar patterns are okay. You know, it's a good way for you to look at sort of maybe previous price action. But we kind of said that we think this is at play. So something like this is what we showed you yesterday. And this was when before we had actually put in this down leg, which got a lot of people shaken out. We said, look, you're holding support. There's no need to be too worried here until we start to break it. And then we have to kind of admit defeat and look at the alternative. So you had support levels here. You've had, obviously, support here, which is where you found yourself. TA works, guys. We chopped all these lines up and you bounced off them beautifully. You've got support here. You can see all these areas of support. This was a restriction of volatility before you spill. And then you actually have got support here. And you do have support here that you've broken. You're now on the underbelly of. If you come up and get back above this now, you know, in my opinion, you're very much primed to go to 17.5 and then 18. And then actually, I think there is the potential with the intro that I did at the start for a Santa rally. And you may get a period where, because the dollar is weak, and the dollar is weak, by the way, guys, a lot weaker than I personally expected. I'm still long dollars massively. I do think the dollar is going to reaffirm. Okay, I still do believe that. but I think it's going to be marginally softer as we see yields for a period of time. And this may allow your risk asset classes, crypto, the stock market, to rally. That's my overall opinion here. For the stock market, this is the thing as well, tying in with my thesis, that I think something major is going to happen. I still potentially think you've got a similarity with here. So we're here right now, and then this is, of course, the S&P, and we've still got this sort of down leg to happen, which I think potentially actually could come on the back end of them cutting rates. Now, everybody thinks that cutting rates is bullish. It is bullish, but there's a lagged effect in this in regards to the fact that when they cut rates, usually it's for a pretty negative reason, and that will often play out. So we're moving from this inflationary, and I think inflation persists, to this real deflationary negative environment, which is very detrimental. And we may also have a deflationary effect on consumers with a high inflation, which is also negative. So it's not a great situation. I was going to cover CBDCs in this video, but I always make my videos go on for a lot longer than normal. I'm going to do a completely separate video on the fact that BlackRock CEO says next generation for markets is tokenization. Guys, cryptocurrency market is the future. Blockchain is the future, in my opinion. It is going to run the very financial system that we're going to use of tomorrow, and change all our lives in the sense that we're going to be using it in the same way that we're seamlessly using the internet right now on a PC. We use smartphones, we drive cars. These are all tech revolutions prior to this one, and it's going to impact our lives in a similar way. So there is still, again, this Russian roulette kind of mentality. You know, you're at these kind of key levels, you're consolidating. You could come back down, and we'll see that, and we'll ultimately be watching for support levels that are getting broken. But for now, I'm still in favor of a bullish bias. In the short term, mid to long term, we still do expect further capitulation and downside for the cryptocurrency market. But I think, actually, to be honest, you may even retrace this. So a rally back up to 20K, in my opinion, is absolutely not out the realms of possibility. And I'm loving seeing a lot of the thumbnails and the Twitter comments at the moment that are exceptionally bearish. The issue is you're bearish at the wrong point, right? So we were bearish from 44K down. We weren't the first out of the market, but we certainly weren't the last. You know, we saved about 61% downside on Bitcoin, altcoins 10, 15, 20x some of our positions if we were to buy today. I just don't think that this is going to be... I don't think this is going to be it for the cryptocurrency market. I really don't. I think something like this potentially is going to play out, and then you're going to see that continuation to the downside. Maybe even you run this high here, and we do that sort of March 2020 schematic that we showed you also with a bullish div here, where you get this run, you retrace this down move, you come up somewhere here, and then you get that harsh slam down, which is going to be correlated with a macro market. So that's the play moving forward, guys. Hopefully you guys have enjoyed this video. If you have, a like is always appreciated. So as a comment. I look forward to seeing each and every one of you in the next YouTube video, guys. Thanks a lot for watching, ladies and gents. See you in the next one. Have a fantastic Friday.